This is a warning to consumers. Not all buyer's agents are acting within the scope of their license, and some are providing advice outside of their scope. Recently, I was fortunate enough to be a guest on the Property Couch podcast with Bryce Holdaway and Ben Kingsley, episode 568. And today we are replaying this episode as a community awareness piece because there is a lot of content within this Property Couch episode that we believe is important to share across as many platforms as possible. Bryce and Ben ask me some questions about my personal journey and my background into the buyer's advocacy space, which we also share with you through this episode. We hope you get enormous value and heed the advice that exists within today's episode of the Brisbane Property Podcast.
All right, Ben, we've got a very special guest today. We are chatting with Melinda Jennison, who's the president of REBAA, which is the Real Estate Buyers Agency Association of Australia, and one of the leading voices shaping professional standards in the buyers agency industry. She's been recognised nationally for her contribution to the field, taking out the REIQ Buyers Agent of the Year multiple times, and has been named Pippa's Property Investment Advisor of the Year. Melinda is passionate about consumer education and helping Australians make confident, well-informed property decisions. She's also the co-host of the Brisbane Property Podcast, where she shares her insights on the market each week. Today, she joins us to discuss one of the biggest risks to the property market right now. Welcome to the Property Couch, Melinda.
Thanks very much for having me. I look forward to chatting with you both today.
We're looking forward to chatting with you. But just to kick it off, property valuers are now asking real estate agents a question they've never had to ask before. How many of these offers came from buyers agents versus standard buyers? So, Melinda, what does this tell us about our property market when valuers can't trust buyers agent transactions anymore?
Yeah, it's concerning, and I definitely think that it's a growing trend across all segments of the market, to be honest. I'm based in Brisbane, and we're certainly seeing a huge surge in the number of offers coming from buyers agents, and a lot of those buyers agents are interstate, so they're not necessarily on the ground and they don't necessarily understand the local nuances of, property values, property markets, what's happening at a local level. So it's a huge concern, and a lot of this has actually come off the back of the huge surge in the volume of buyers agents that have come into the industry. And this has especially happened, I would say, in the last 5 years. And I think that as an industry, we need to be aware and alert of the fact that this is changing the game, but it's also potentially having an impact in ways that we never imagined that it would. And I'm sure that's what we're going to be unpacking together today.
We are. Just on that, have you got any statistics on how many are actually entering the market?
As an association, we actually started to track the volume of buyers agents in the market, and we were spreadsheeting this on a state-by-state basis. And what we found throughout that process of tracking is that new entrants were coming into the market so much faster than what we could reconcile through our spreadsheeting. We were well into the thousands of buyers agents across Australia by the time we actually called that project or pull that project off the cards, because it became, a monstrous task to try and track. And of course, there's been a lot of buyers agents that come into the industry. They might operate for a short while and then they drop out because they're not looking after clients, or they're not advocating in the way that they should be, and they're not developing the professional reputation. So they're in the market for a short time. Unfortunately, potentially consumers are impacted during that time, but then they leave the industry. So it is a very big concern for us, especially as the national body representing best practice in the industry. But yeah, I would say that it's definitely into the thousands now, although there's no official record that anybody holds in terms of the true volume.
Now, Melinda, we're obviously going to go deep into the whole buyer's agency story here, but let our community learn a little bit more about you. So tell us a little about what money was like growing up, and did you have conversations around the dinner table when it comes to running the household economics?
It's a great question. I don't often talk about my childhood, but I grew up in a family where my parents were both property investors. My dad actually was part of a syndicate with his workmates, and together they combined their borrowing capacity, I guess you could say, and they used to purchase blocks of flats here in Brisbane, and then they used to manage those themselves. I have memories growing up of going around to the flats that Dad partly owned, weeding the lawn lawns and also knocking on the doors to collect rent. So it became part of my DNA. Dad was passionate about providing accommodation for people. So he wanted to make sure that all of the properties that he owned presented well. They always had the best lawns in the streets, despite the fact that they were rental properties. And, we took great pride in ensuring that the accommodation was of a standard that would meet the needs of those people that needed the housing at that time. Now, I also have memories of when interest rates became sky high and, the conversation around the dinner table at that point changed significantly because my parents were doing it tough because they held multiple properties and, debt was high and, that was a real cost of living pinch. And I remember going to the supermarket with mum and there was a real sense of counting every dollar to ensure that we could, as a family, continue to survive, but also continue to maintain the investment properties that my dad held within his portfolio. So some really good memories, but also memories of how to manage money effectively. And I think that became the grounding for me in ensuring that when I moved out of home, I just decided quite early I was just going to save for a deposit. I didn't want to be a renter. I wanted to own. And my first move from my family home was into the first property that I purchased as a homeowner, which, was a good start for me in getting onto the property ladder.
An awesome pedigree in terms of coming into the property space. Did you ever ask your dad about how he got into that syndicate or how he decided that property investment was going to be for him?
It's a good question. And I have never asked Dad that. I just always felt that it was part of what he did. But it's going to be something that I do investigate because I think that's something that I should know. I do know, though, that Dad always wanted to help others. And I feel like it was a natural progression to be able to set himself up and not only himself, but also his family. He worked really hard. He worked for the same company for more than 45 years before he moved into retirement. And my mum also worked. And that was at a time where not all mothers worked. A lot of mothers stayed home and mum was certainly there when we were at school, but she went back into the workforce when we were old enough to, get to and from school ourselves. So we were certainly a working class family. But I think Dad just wanted to, provide something that was going to give people choice as they got older. And now they're living a wonderful retirement. They're right now in a caravan traveling on the east coast of New South Wales, and they are living the dream for them, which is caravanning, several caravan holidays every single year throughout Australia.
Melinda, we've been asking everyone that question, whoever comes on the podcast, just to start the conversation around money. And look, 9 times out of 10, people say no, they didn't have the conversation. So you're one of the 10, right? So I would be interested in a couple of things around that. One, You mentioned you didn't know why I was in the syndicate. I wonder if you knew any of the influences that your parents had to get them into property investing in the first place. But my question is around, it seems like there was 2 parts, that you grew up with a paradigm of investing and abundance and going after what we want. And then there was a moment in time when interest rates went up and then you had to also experience your parents tightening the belt. What were some of the lessons that you learnt and what were some of the observations that you made around money, given that it seemed like it was probably a little more flowy before that interest rate movement and then afterwards there was a belt tightening? What were the impacts on you around that time?
Look, I think that, as a family, we didn't go out for meals. Mum and Dad took coffee in a thermos when we went out to weekend sport. Our lifestyle really was about working hard, playing sport on weekends, and our social life was catching up with people in the backyard around the swimming pool or at a barbecue event. I can recall on very rare occasions we would go out for a family meal to a restaurant. We certainly wouldn't go to a cafe and we certainly wouldn't buy coffee. So I think that was just embedded into our lifestyle growing up. I know times have changed and that's no longer the lifestyle that a lot of people live, but it certainly was the lifestyle that we lived back then. And I think that really taught me around choice. We all have a choice in life, and more I hear that, people are doing it tough, and I understand that. But then when you really break down their life and you can see that they enjoy a coffee each day, they buy their lunch, they'll go out for dinner once a week, maybe more often than that. And you can break down that spending and the habits around that spending and realize that they've actually got a life that was quite different to what our life might have looked like growing up. But I never regret that. I feel like we had a wonderful life, and we're certainly a really close family. And I'm really fortunate to be close to my parents, my brothers, and our extended family. And I think that's what was embedded into us as kids, that family matters, friends matter, and the superficial stuff that money can buy, that's less important. And building wealth is more about providing for the people that you love. And I think that's what's been embedded into me as an individual.
And Mel, that upbringing sounds like a great one. You've learnt delayed gratification. You've learnt about choices that you make. You mentioned there that you've got a couple of brothers. Growing up in the same household, has everyone taken on the same actions and behaviours, or are we seeing different sort of money behaviours without, sort of giving away or blaming anyone or judging anyone? Are you all consistent in terms of the lessons that your dad showed you?
No, we're not. My older brother has never owned his own home, and he rents property. My younger brother does own his own home, and he also has investment properties. So I think that the choices we make, despite our upbringing, can ultimately contribute to, what we create for ourselves, because I think everybody potentially has opportunity that they can either leverage or choose not to.
So let's pivot to your professional life, Melinda. You're clearly you're occupying a role at REBAA. You're an incredible buyer's agent. You're running a really wonderful business there in Brisbane. But that wasn't always the case. How did we transition from, being dependent on mum and dad, learning all these lessons, and then sort of moving into your first piece of independence? What did that look like? What was the first job like? And when did you realise property was part of your pathway?
So my first job was actually part-time as a university tutor and academic. So I went to university. I studied 4 years in an undergraduate degree of exercise science. And then I went and completed a further 3 years of study to obtain my PhD or my doctorate. Now, the field that I was in at that time was exercise physiology, so it's quite different to property. But I supported myself at the time. I also had my now husband that we were living together. So together we just worked hard to, I had a part-time income. He was a builder, so he had a higher income than me, but we contributed equally to paying down the debt of the home that we'd purchased for ourselves. And those years, I've got fond memories of them, but I worked really hard. I studied, I worked, I paid down debt. I remember having friends over for a barbecue, and then you'd give them a paintbrush or ask them to carry some blocks to build a new retaining wall or something around the house. And, they were fun days, and little did they know they were building equity for us to upgrade our home. But we'd also always pay them back in beer and sausages or steaks. And, it was a wonderful way to pay people back then. And look, from that time, I worked for a couple of years in academia. I also did a lot of research. The research that I was doing at the time, I actually found personally challenging because I was working with patients who had cystic fibrosis. They were adults, they were a similar age to me at the time, and I was trying to understand how exercise could impact them and give them a better life. But I knew that I wasn't going to impact those people directly because they were at end stage of life, and yet they were quite young, they were a similar age to me, and I found that challenging. However, at the same time, because we'd worked so hard on our own home, we were considering starting our own investment portfolio because we had built up an equity position thanks to the barbecues and the beers, and we wanted to leverage from that. And so we decided to start investing in property from the equity that we'd built from our own home. And from there, the rest is history. I developed a passion for property. I wanted to use the skills that I'd developed in research in understanding property numbers rather than just statistics and numbers relating to a different field. So it was a transferable skill. Scott and I worked really hard to build out our own portfolio at the same time as raising a family. So we made some compromises and sacrifices in terms of what we did and the holidays that we went on so that we could get ahead. And eventually we were in the position where we were not only able to purchase and hold investment properties, but we were able to develop properties. And obviously that was an advantage given that Scott was a licensed builder as well. So we moved from being quite passive. We moved from being homeowners, a very basic home. We upgraded our home, we leveraged the equity, and then we built a portfolio across residential and commercial before we moved into small-scale property development. And that's where the passion really was ignited. And I felt that this skill set that we had as a combined skill set could really benefit some other people, because not only did we learn through doing, we also leveraged some of the relationships that we'd built along the way so that we could really be confident in making recommendations to others.
Melinda, did you go and work in another buyer's agency business or in any other property business, or did you just leapfrog straight into setting up your own?
I did work for another buyer's agency business here in Brisbane for just under 12 months. I really wanted to understand what was involved being a new industry in representing buyers. Obviously, I had obtained my real estate license, but I wanted to understand the skill set involved in representing a buyer more so than just what a course would provide. And look, that experience taught me some of the basics, and then overlaying that with the skill set that I already had. And look, the way we represent buyers is very research-based, it's very objective, and that's just based on my background. So I was able to then apply the process that I'd learnt and then overlay that with a lot of the resources that we were able to provide in due diligence and buyer education, to replicate that in a way that I felt was the best way possible for buyers to be purchasing here in Brisbane.
And we're seeing that sort of explosion of buyers agents coming into the market, and we're not necessarily seeing these enthusiastic buyers agents taking the time to work in another business to learn their craft. To your point, we're potentially just seeing them do maybe a short course or get into the market in a certain way. Can you expand on what you are observing, as president of REBAA in terms of seeing how these, next generation of buyers agents are operating?
Absolutely. And, I think we're all seeing this happen around us, and those that have been in the industry for more than 7 or 8 years have seen this explosion of new buyers agents, especially in the last 5 years. Now, there's a lot of ways that they're sort of leapfrogging into this position. Yes, there's some commercially available short courses, not conducted by registered training organisations, but teaching people how to make money from buyers advocacy as a service. Look, I've never come from the motivation of trying to make money. I think the motivation must come from trying to help people. And I think that's where some of the messaging in the market is wrong, because it's attracting the wrong type of people at times. Because of some of the messaging in the market, we're seeing some people enter this industry that potentially have the wrong motivation. They are trying to make money, and therefore they're cutting corners in true buyer representation and true buyer advocacy. We're seeing some people try and circumnavigate best practice in terms of the way to be licensed. We're seeing some people that might be operating in other states. For example, they might be operating in New South Wales, or they might be operating in Victoria, but they've found a way to fast track the licensing process and circumnavigate within the rules, but not in a way that protects the consumer that they represent. And they may be going to other states where there's a faster pathway to become licensed, and then through automatic mutual recognition legislation, they start operating almost immediately without understanding the local legislation that applies to the state that they're operating in. A lot of people don't understand that in real estate, the legislation is state-based. So there are different rules within each state. There's a different contract process within each state. And because of that, it's so important for buyers to really understand who they are partnering with, because you want to make sure you're working with someone that really understands the intricacies of the state legislation, as well as the processes that operate within each state. So we are seeing all of these things. It's a huge concern for our industry, because obviously it's diluting the impact of what true buyers advocacy looks like. And that's a concern for me as REBAA president, but also for others operating in the industry who are doing what is right for the consumer.
Yeah, because structurally it's challenging, because the buyers agency industry is still a cottage industry. So you've got usually people who are doing it on a 1 to 5 employee basis, and then you've got some players that are doing it at a larger scale. But there's a very limited pathway or academy or apprenticeship approaches. Because if you think about the we all know this, but for the benefit of the community, you think about the the small business operator running a buyer's agency, one of the reasons they want to put on a new person is to help them grow their business. So therefore they want to have a revenue writing person. And then you got a bunch of people all putting their hands up and go, well, I'd actually like to learn how to do that. And there's limited opportunities for the bridge to get people involved. So there's that from the legitimate buyers agents that want to help people. And then you obviously have, combine that with what you talked about before around some people having a get rich quick motivation for getting people into this lane. Can you tell, you hinted on it, can you tell us a little bit about why the Queensland licensing process and how that probably creates a backdoor and how that differs to other states and territories?
Yes, of course. So here in Queensland, and we operate in Queensland, so we know the licensing regime here. To work alongside another principal licensee here in Queensland, you need to do a registration course, which is a course run by a registered RTO, registered training organisation. And then once you've completed that course, and it could be done online in as little as a couple of weeks, unfortunately, you can then work alongside or under the supervision of a principal licensee. You then have the option to upgrade that to a full license. And again, some RTOs are providing that option, which can be done, again, perhaps in as little as a month. And that enables you to operate independently as a fully licensed buyer's agent, or indeed a sales agent or property manager here in Queensland. Now, with new mutual recognition laws that are Australia-wide, that enables someone to come to Queensland, or in fact, perhaps just virtually, by enrolling in a Queensland registered training organisation course, obtain their full licence in potentially as short a time frame as up to 6 weeks, and then start operating in other jurisdictions, which may typically require up to 2 years of working under a principal licensee to obtain the adequate license if they were to choose the pathway that was adequate for that particular state. So it really is a shortcut, and unfortunately it teaches them how to operate under Queensland laws and Queensland frameworks, but it doesn't teach them how to operate under their local jurisdiction. And that's probably the biggest concern that we have, is that it's legal, yes. Is it ethical? Not sure. Is it best practice? Certainly not.
If you had your way, how would you close that loophole?
If I had my way, it would be a national licensing regime, especially for buyers advocacy, which has become more borderless. I think that the licensing regime has been set up specifically for selling agents and property managers, which typically are more patch-based or more location-based services. But with the rise of buyers advocacy, I simply don't think that the legislation and the licensing regime has kept up, because we are seeing that people can buy across borders with the rise of AI and digital technology. People can represent buyers from other states and purchase interstate. And because of this, we're seeing, these loopholes unfold. I believe that in time we may see changes in this space. There's certainly a lot of advocacy for change at the moment, but unfortunately the concern that we have is how many consumers will be impacted between now and when that change takes place, because we all know that legislative change can be very slow and very tedious. So that would be the best way to resolve the issue, but we know that that's not going to happen overnight.
Well, I can tell you in the 2010s, when I was chair of the Property Investment Professionals of Australia, that there was an initiative called NOLA, which was effectively trying to bring in a national regulated recognition of real estate agent licenses. And what we did see is some of the state-based groups pushed back on it, because some of them are very well run. They've got, the associations themselves didn't want necessarily to have competition coming into their patch and so forth. So there was a lot of pushback, and that sort of has pushed back this regime that we're trying to get in place, which is national. We're seeing it plumbing, electricity, and those type of things. It really is valuable. We're such a small country with such a small population, but the ability to be able to move and do different work in different places just makes a lot of sense. So hopefully we'll continue to keep pushing down that path to get that national legislation. But we do want to talk about obviously the dangers of the behaviours and practices that we are seeing from, let's call them enthusiastic new entrants in terms of that. So can you just sort of get a sense of what's being reported to the association around some of the behaviours and actions of some of these buyers agents?
Absolutely. And there's perhaps a few stories that I can share with you of some of the things that have been reported to us. I think as the national body representing buyers agents, consumers can sometimes confuse our role and they think that we have some sort of governing role within the industry. And unfortunately, we don't. We can only govern the actions of those who are our members, but we can't govern the actions of the broader community. That is the role of the Office of Fair Trading. But because of that, we do often receive these complaints. And we have received complaints from consumers who have partnered with buyers agents whereby, as an example, there's a lot of pressure tactics applied up front following the very first investigative call or discovery call or strategy call, whatever it's been described to be. And there's a very big sales push to onboard a client. Now, of course, in buyers advocacy, where it's different to sales is that most buyers agents will charge an upfront fee. And we've seen a lot of unscrupulous operators really pushing to drive up the volume of clients just so that they can get that upfront fee. And once the upfront fee is paid, and then they're ghosted as a consumer and there's not much follow-up service. Now, that's very concerning for us as an industry body because we certainly don't want consumers to have the perception that that is the role of a buyer's agent, to push for the client on board and then not deliver the service. Through our own inquiry at our business, we've also partnered with some of these buyers who have paid that upfront fee with others and potentially sat out of the market for 2 or 3 months, sometimes up to 6 months. In a shifting market, that's a huge opportunity cost of delay. And so where they thought that they were waiting for opportunities to come, they realised that they were just actually not being serviced whatsoever. And then that's obviously cost them time to be out of the market. We've also received stories whereby consumers have purchased investment properties by buyers agents, sight unseen. That means the buyers agent themselves did not actually inspect the property, but they relied upon photos provided to them from the selling agent. Later, the same buyers found out that the property itself did not actually meet the minimum housing standards for the state in which that property was purchased. So those buyers were up for thousands of dollars. In this case, it was nearly $15,000 of maintenance and rectification works before that property was even rent ready. So again, these are serious implications. Our job as a buyer's agent is not just to find the right property, but it's to complete thorough due diligence to ensure the property meets the standards, especially if it is an investment property. The buyer must be aware of all of the nuances, good and bad, before they actually put their money on the table. And I think these are some of the growing trends that we're seeing in our industry, which is causing the consumer to question the value of partnering with a buyer's agent, because as I've said previously, the more consumers that have this type of experience, the more the word on the street will be that there's no value that a buyer's agent can actually bring. And the truth is that those that deliver high levels of service and high levels of value provide a completely opposite client experience, but it's very difficult for the consumer to cut through some of the marketing messages out there to determine who is actually going to provide that follow-up service and the delivery of the outcome versus who may not.
What's your definition of a buyer's agent so that we can create some awareness here for like the archetype of the buyer's agent that you want to represent? Because we had someone who recently wrote into our podcast. Ben and I answered the question a couple of weeks ago, and they said, "Oh, look, my buyer's agent said I asked too many questions, and then they proceeded to sell me an off-the-plan apartment or a house, house and land package." So, Ben and I have got a clear definition that we talked about in our book around what that is. But I'd be interested to know from your perspective and who you want to represent. What does that buyer's agent look like?
So a buyer's agent is someone who represents the buyer's interests exclusively, is paid by the buyer exclusively, does not accept any third-party commissions from developers or builders or others, especially in relation to the property that they're purchasing, and is there really to answer all of the questions to help that buyer feel confident about their purchase. So that involves very thorough due diligence, accurate appraisals, guidance through negotiation or auction bidding, and just generally hand-holding that client from the moment that you're first starting the conversation right through to when they settle, and obviously maintaining an ongoing relationship. That's what true buyer's advocacy looks like.
So how much does it irritate you as the representative of the peak body that project marketers are being, that they're putting a buyer's agent label on them, but they're just not?
Well, they're called property spruikers, but again, this comes down to clever marketing. And I think there's so much mixed messaging in the market about what a true buyer's agent does. And for property spruikers that are choosing to use the terminology of, a buyer's agent or a buyer's advocate, it really does confuse the consumer, because, when people think that they're being represented professionally and that their interests are being protected because of the term of what someone calls themselves, it's damaging for our industry that that's actually happening.
So Mel, in terms of when you are seeing even buyer's agents who are licensed real estate agents acting on behalf of the buyer, when they're buying borderless and they're going into other markets, has the association been told by these clients who have complained, or these people have complained, that they found out that real estate agent didn't even have a license to actually buy in that state or territory? In fact, they're using their, in the hypothetical example, they've got a Victorian license, but they're buying investment properties for clients in Brisbane, and they're not even licensed up there to do so, but they think it's okay because the client that they're buying for is Victorian based.
Goodness, there's been so much confusion within our industry around this. And, as the REBAA president, I can honestly say that the number of applicants that have applied for REBAA membership that have been declined on this very point, people think that they don't need a local license to be purchasing in the state that they're buying into, and that's not true. Now, it becomes a little bit muddied with the mutual recognition licensing arrangements that are now in place, but it's important for everybody to know that that does not apply to every single state. So in the scenario that you've raised there, Ben, if someone holds a Victorian license and they're purchasing here in Queensland, actually you cannot rely on any mutual recognition. You need a Queensland license that's going to be separate to your Victorian license. And therefore, if you are representing a buyer in a real estate transaction, and that could involve anything from inspecting the property, appraising the property, negotiating on behalf of someone for that property, these are all considered services that would require a license and would trigger that requirement for a license. So if you're doing that and you don't hold a local license, you're acting outside of the law, and technically you would not be entitled to any payment for those professional services rendered. Unfortunately, it's the consumer that's not actually aware of this. The other thing that I notice, and again, if we're using Queensland as the example, a lot of interstate buyer's agents that are purchasing here in Queensland don't understand the legislative requirements in relation to the paperwork that needs to be completed as a buyer representative. We have appointment forms that must be completed to enable you to be paid. Otherwise, as a consumer, you simply would not have to pay. If a licensed real estate agent or licensed buyer's agent does not actually complete the required paperwork and have their client sign, then there's no requirement for that client to ever pay them for the services rendered. So it has ramifications at all levels. There's professional indemnity insurance ramifications, there's client protection ramifications, there's the ability for that individual or business to be paid for their professional services. I would say that no one deserves to be paid if they're operating outside of the law. So, that part of it concerns me less, but I certainly have concerns for the consumer that really is the one that is, ultimately is most exposed in these sorts of transactions.
So Mel, in sort of rounding that out, what would be the sort of 3 or 4 things or questions as a consumer that I should be asking my buyer's agency business or individual that might be working for me to know that they are compliant or that they're qualified to do the work that I want them to do? Is there 2 or 3 nice little sort of questions that you could pose to our community so they can get ready and prepped to ask those questions when they get spooked through social media to come and use this buyer's agent to buy in whoop whoop? because they can make a quick buck?
Look, I think one of the biggest questions is, are they adequately licensed? And unfortunately, with some of the businesses that are evolving and the explosion in the size of some of the businesses that are in this space, it's very hard to actually understand, well, who is doing what and for what part of the service. But, as a consumer, you have a right to know, if you're assigned a buyer's agent, you should actually have a right to ask to see their license in the state that you're purchasing that property in, because everyone should hold that license if they are representing a buyer. The second thing is, as a consumer, you want to protect yourself. And the way to do that is to ensure that the buyer's agent that you're partnering with has professional indemnity insurance in the event that something goes wrong and that you're raising a claim. I think that it's so important to the buyer's agent community also to understand that there's so many professional indemnity policies out there that exclude property investment advice as an inclusion within their cover. And I don't think a lot of people really understand that that is the case. So as a consumer, if you're actually seeking investment advice from your buyer's agent, I'd be wanting to ensure that their professional indemnity insurance covers you for the advice that they're giving you, because if it doesn't, then that's another red flag for us. And I'd also be wanting to know whether they disclosing any third-party kickbacks, because again, professional buyer's agents, there is a disclosure regime in every state whereby you can disclose if you are receiving any kickbacks. And as a consumer, I would want to know that that is the case so that I can assess whether there is a conflict or not in recommendations that may be given. So, for example, within our business, we refer a lot of our clients to conveyancers, to building and pest inspectors, to property managers. Now, we choose not to accept any referral fees from third parties like this, but instead we ask those providers to pass on discounts to our clients. There are some other providers that will take kickbacks. A lot of those will be hidden. And as a consumer, I'd feel pretty ripped off if my buyer's agent referred me to a third party, not because they're going to act in my best interest, but because there was a financial incentive involved. So they're probably the biggest three that I'd focus on, really to dig deep about your buyer's agent.
Melinda, what sort of influence do you get? You're getting a lot of people coming to you and complaining. I'm sure you're getting your members wanting to advocate. What conversations are you able to have with legislation around how to be the solution rather than just being the reporter of some of the collateral damage?
Yeah, it's a great question. And look, I've sat in the president's role for 2 years now. This is my third term in this space. And over the last 2 years or so, I've had a lot of conversations with industry bodies within each state, as well as, so that's each of the real estate institutes, but also the Real Estate Institute of Australia. And I'm really trying to drive conversation with other industry bodies. For example, even just with mortgage broking industry bodies, PIPA, the Property Investment Professionals of Australia. I think as an industry, we have a responsibility collectively to raise standards and raise awareness of the issues. In terms of policy change, that's the way we tackle that is through trying to advocate for best practice and trying to get the attention of some of these change makers, because at the end of the day, I haven't sat at the table of any policy makers, but I'd love to be able to do so if given the opportunity. And it comes from just being a strong voice. For anyone that follows me on LinkedIn, you'll know I have a strong opinion about certain things at certain times. And really, it's about protecting the consumer and making sure that they at the end of the day are not being ripped off by some of the unscrupulous operators that are in our industry.
Now, well, Mel, we've collaborated, you and me, recently on a piece of work that Effie Zahos did in regards to Channel 9 News. We've played that at the start of this episode as a sort of fall in terms of these animal spirits and our concerns in the industry. And I look forward to working with my capacity as chair of PICA in terms of trying to get that message out there. But one of the things that you and I have spoken a lot about is this idea that buyers agents are moonlighting in the property investment space without sort of any qualifications or background in financial services, to your point before about giving that type of advice. And we're seeing it not only in buyers agents, but mortgage brokers and accountants. And we saw it in the PIPA survey recently about the number one professional that I talk to about property investment advice is a mortgage broker. Then I think number two came in as a qualified property investment advisor, which they should be number one. And then I've got accountants and buyer's agents sort of in that top four. Now, of course, a mortgage broker gets paid a commission for setting the loan up. So they would love the fact that you go out and buy more properties and they can take on more commission. Buyer's agent gets paid for the execution and fulfillment of buying that property. So there's all this vested interest, right? And that's what we talked about in terms of conflicted remuneration and making disclosures and that. And in our business, everyone knows Empower Wealth as a business has multi-services and specialists in those areas. And so that conflicted remuneration is documented in all of the disclosure documents and so forth. And coming back to sort of saying about the licensing, we've got to have the company license in every state, and then we've got to have each of the buyer's agents in each state licensed in that. And we're talking in the thousands, if not tens of thousands of dollars that we have to pay because of the regulatory regime that we have in this country. But what are you seeing from a buyer's agency point of view, where they're wearing the property strategy hat, like they're wearing the investment advisor hat? What work are they doing compared to what a financial planner would normally do when someone's getting financial advice? Can you take us through some of the examples you've seen or heard or have been complained to you by upset clients or generally customers, I should say?
It's no surprise to any of us what's happening out there, and we're seeing clients or not clients, but we're seeing consumers who are being sold the dream. We're seeing consumers that are being persuaded to purchase in certain markets simply because that's the flavour of the month in terms of the investor hotspot, if you like. We're seeing consumers being persuaded to purchase in certain entities, especially when their borrowing capacity is maxed out in their personal names. We're seeing consumers encouraged to set up self-managed super funds as a way to continue to build out their portfolios. And these are huge red flags if they're coming from a buyer's agent. They're huge red flags if they're coming from a mortgage broker. This is the sort of advice that absolutely must come from a financial advisor or, in some instances, an accountant, because these are not areas that a qualified property investment advisor should be advising on, and they're also not areas that a buyer's agent should be providing advice on. As buyer's agents and even as qualified property investment advisors that are acting in the capacity of a buyer's agent, our role is specific to helping that client understand the property that we're looking to purchase and how property as an investment asset can fulfill some of the goals, I guess you could say, that they have as an individual investor. But we certainly can't provide the advice around the structure of how they're purchasing those assets or how they're to be setting up the finance for those assets. I know we understand the pros and cons of that, and a lot of the time we can provide education so that they can have the conversations with the right people to ensure they're getting the advice that's specific for them. And it's always individual as well. I see a lot of this group mass education around, the next thing is you need to go and set up this trust because you're going to be able to maximize your borrowing capacity. And once you've maxed out there, you can go and set up your self-managed super fund. That sort of general advice for everybody, following the same strategy is super risky because every single individual has their own income, their own risk appetite, their own income and expenses. And we've really got to consider everyone as an individual and not just take on this mass one-size-fits-all property investment strategy.
There'd be a lot of buyer's agents who are creating soft advice that they would just be unaware of. They'd just be oblivious to that. How is REBAA, you as in REBAA, how are you trying to educate them to delineate between what you just described and having more of a transactional basis on why you've been engaged rather than the driver of the strategy?
Our all of our members, we have a members forum where, off the back of the press release that Bryce put out on behalf of PICA, the Property Investment Council of Australia, we actually shared those concerns with our members to ensure that they are compliant. Now, we have a professional code of conduct within REBAA that prohibits them from acting outside of the law, but it also prohibits them from providing the type of advice that was specifically referred to in that documentation. So we know as professional operators that it is so important to build a professional team around the buyer, and we're just one part of that team. That professional team usually involves their accountant, their mortgage broker, and their financial advisor. And if they don't have that, it's our responsibility to draw their attention to the fact that they need that, or to make the appropriate introductions to ensure that they're getting the appropriate advice. The problem with the industry at the moment is that a lot of buyers agents are so focused on, dare I say, getting the deal done, that they're not actually handbraking that onboarding process and ensuring that that buyer is set up to buy in the right way from the outset. I know sometimes, when we're working with buyers ourselves, they actually are a little bit unsure as to how they're supposed to structure the purchase or what their next step needs to be, but they want to buy. So that's the perfect opportunity to introduce them to someone that actually can provide that advice for them, because at the end of the day, you want to make sure, one, that they are ready to purchase property and that is the pathway that's right for them. But two, if they are going to purchase property, that they've set it up in an appropriate way from the outset, because 10 years from now or 20 years from now, when it matters more, that can have significant implications. So, our role is just to get it right from the outset.
And, one of the challenges we have in the legislation is the facilitation of referring to, these other specialists, right? What we talked about on the 9 News episode was around this idea that the social media draws them in. They speak to a buyer's agent or a mortgage broker or an accountant, and then they have their team of experts around them and they facilitate that. But it's off the initiation of a spruiking or get-rich-quick message in social media. So that's where the regulatory guides also address this idea of, how is that being facilitated, right? And so rather than it being downstream, whereby a buyer's agent comes into the program once the customer's clear on their objectives and so forth. I will take a moment just now to just quickly, for the community, just explain a few things, because everyone's probably a little confused. So I'll give it my best shot, right? Don't hold me to this, but I've spent a lot of time both as the chair of PIPA, where we have been advocating for property investment advice to be licensed. But it goes like this. Under the Corporations Act, we have what's called general advice and personal advice. And when you are talking about general advice, you can only talk about statements of fact in relation to investment products. And investment products are considered shares, equities, bonds, personal insurances, and any type of investment product, including self-managed super funds, lending via trust structure. They are all licensed investment products, and you need to be a financial planner, or you need to be an authorised representative of someone who is a financial planner to be able to get advice on those investment products. Now, direct real estate, residential real estate, is not classified as a financial product. So what can happen is that if you're a QPIA and you've done the PIPA course, then you are able to give property investment advice. And the role of that course is designed to allow you to understand the client's objectives. So it follows the principles of what a statement of advice should look like when you are dealing with a financial planner. So it follows the principles. What are your objectives? And then, is this in the best interest of the client? And have you done rigorous investigations in terms of the ability for the client to afford that? So by that example, what a property strategy or plan should include is what are my objectives in terms of this particular piece of work, or longer term in terms of what this investment is going to do. Then it's also about my risk profile. So what risk tolerance do I have? Am I low, moderate, high? Do I want to obviously have debt included in that? And so where a qualified property investment advisor, they can then do some financial modelling. And that financial modelling is cash modelling. But to Melinda's point earlier, if that is just in your individual name, if you are looking to set up an entity by which you are going to invest or borrow, then under the Corporations Act and under ASIC's interpretations of the law, they would consider that as receiving personal advice, because they would class that as a product that falls under that category. So it is true that a mortgage broker then can do the credit implementation. If you are looking to do different sort of ownership structures which does then have tax implications, then it's well worth getting a second opinion from a tax advisor in terms of, you know, what sort of structure and those types of things you might set up. So there is a pathway for a qualified property investment advisor to do a strategy document, and that's what you do as the final module under that course, where you're giving a case study and you basically prepare a strategy for that particular client, and then that's reviewed by the markers of the course, and then ultimately you get qualification. But again, it's all online learning. It's not an RTA, so we need to also be mindful of that. Back when I've contributed to that learning materials, it's 6 modules as part of that particular course. And I would encourage anyone who's serious about delivering property investment advice to retail investors, which is effectively mum and dad individuals, because what we also need to understand under the Tax Act is that residential property, direct residential property, is actually considered a hobby investment. So it has different treatments to other investment classes that if we're buying through a company or through a trust or through a partnership or through a self-managed fund and all of those other things, that's when you potentially need to get that additional advice from the licensed or authorised person able to deliver that to you. So hopefully for our community, I haven't overcomplicated it, but...
Well, no, it just begs the question of why isn't residential real estate on the approved product list? And the answer is because it's a form of shelter. It's a basic need first.
And the complexity
is the only investment product in the world
that
is not dominated by investors.
Exactly.
Because so then trying to regulate that when you've got 70% of the market that are buying it as a form of shelter, and then trying to go to, to Melinda's point earlier, go to these massive bodies that all have, and to your point before about NOLA, who have their own agendas that they want. So therefore, that's why people can dance with the devil in this particular lane, is because it's not going to be on the approved product list. Melinda, what do you, if any commentary, whether it's your own observations through your own investor paradigm, your own business paradigm, or that of your role as the president, but there is market manipulation that is going on in various markets driven by buyers agents who are doing all the things we've just spoken about, concentration and marketing hype and channeling them all in. What are your observations and feedback around that practice, and I guess as a consumer warning piece to our audience?
Look, I see it shifting some of the smaller markets significantly, and I think there's been evidence of that in the past, which you've talked about on previous episodes as well, especially in regional markets. You start with low value properties, large volumes of buyers come into a market, buy up residential real estate for investment purposes. Generally, the buyers are interstate buyers, so they have a much higher income, and so it's an affordable property for the purchaser. The issue is that it becomes unaffordable for the local buyer, and I think affordability is something that's talked about a lot in property and property investment right now. If the property becomes unaffordable for the local home buyer, and the shift between the number of investors and the number of home buyers is so significant, that's a structural change in a market. Now, you pointed out that, up to 70% of buyers in any market typically have been owner-occupiers. So if you're purchasing in a market where there's 70% owner-occupiers and 30% investors, as an investor, not only are you providing shelter for 30% of the market, but when your investment property becomes available for sale, there's likely to be more upward pressure on rents simply because there's fewer investment properties in that market, and that is at a time where demand is heightened. in some of those areas where buyers agents have shifted markets purely because of the volume of buyers transacting in a certain space of time, we'll probably see the percentage of owner occupiers to investors shift. And unfortunately, we're not going to see that until the next census. And I am really looking out for what some of those numbers might reveal for us. In that instance, whilst there could be some short-term immediate uplift in values, it could be artificial, and the long-term sustainability of those markets is not really going to be discoverable until such time as we see those buyers agents shift out of the market and we see that market stabilise. And the concern that we have is not only for the investors, we've now got a higher concentration of property investors in that space. When we see those properties be listed for rent, we're going to have more supply, and that could put downward pressure on rents, and that could actually, suppress some of those yields that people have been chasing. But on the flip side, if they need to sell and the owner occupiers in the area can't afford to buy simply because their local income is at a point that it's unaffordable for them to hold a mortgage at that level, that's a real structural shift, and we might then see downward pressure on prices. So I think for the investor, there's a risk. For the area, there's a risk. And I think it's just a consequence of a very rapidly evolving market in terms of the volume of buyers agents, the emergence of borderless investing, and the integration of AI and technology in assisting some of these buyers agencies to scale and purchase at scale like this. And it is a concern.
Melinda, I can actually tell you I've done some analysis recently whereby I was looking at that particular trend line, because that's how you can potentially validate it. And the census data gives us that snapshot every 5 years. But I can give you an example in Townsville, where I have been following that particular trend line. And so what we did is we took a baseline of the percentage of rental properties that were recycling every 12 months or every 6 months. So in other words, because we measure every property in Australia with every address, we then sort of said which one of those properties entered the rental market after they were sold. And so we had a baseline of around sort of 5 to 7 or 8% about 5 to 10 years ago. And now that baseline is up to 3 times higher. It's sitting at 28, 29%. So that's basically telling you that the new wave of buyers that are coming in there are investors, which to the point it's going to move, sort of vacancy rates a little bit higher, and that's going to put pressure on the rents on the downside. But it's also going to mean, it's like, to your point, it's pumped up the property prices where the locals can't afford it. And as investors, we should be price takers, not price makers. And so that's why we see the volatility in those particular markets. Right. So we're going to Bryce and I are going to do a bit of a deep dive on that in next week's episode. So, from that point of view, that rings true. So everything you just said in terms of from a behavioural and a market movement point of view will see itself play out as part of that particular story. Look, my final question to you, because I could sit here and we could talk all day and we want to get the message out there, but we are running out of time. We've talked a lot about the negativity and the concerns, and we know, unfortunately, there's not a greater percentages that are buyers agents who are members of the REBAA Association. So we would think that first and foremost as a consumer, see if they're a member, make sure that they're operating under that umbrella. That's helpful in terms of to give you an idea of their professionalism. That's number one. And then number two is what sort of positive message can we put out there in terms of a good story to finish off with around the value of buyers agents? What makes the job so rewarding for you in terms of the great work that you do for your clients?
Look, this is something I could talk all day about, and unfortunately we tend to focus on what's not going well in our industry rather than what is going well in our industry. Look, we are in really competitive markets, and I know across Australia there's a lot of areas that are undersupplied right now. What do I mean by that? I mean listing volumes are historically low, and that's especially the case here in Brisbane. It's Darwin, Perth and Adelaide have been similar, and I know markets across the board really have fewer properties available for sale today than they did based on the long-term averages. So where true buyers advocates can add so much value is really helping buyers to be ready to buy in a fast-moving market. We're seeing sales volumes higher than average and listing volumes lower than average. And so what that means is a lot of properties are transacting very quickly. Now, making such a big purchase, these purchases should not be made in a matter of hours. They should, people should have time to consider that opportunity in detail. And where we add so much value is giving the luxury of time in a market that doesn't provide it. We have the opportunity to preview properties perhaps before they're listed. We can provide the due diligence, the price analysis, and the full guidance for a buyer to help them understand the opportunity, to help them understand the numbers before they have to make such a huge financial commitment. And I think that we can't underestimate the value of time in a market where we don't have the luxury of time. I'd also add to that, we do have the capacity to really educate buyers and help them to become confident. There's a lot of first home buyers entering the market at the moment. They are the most vulnerable group in terms of buyers. There are some very vulnerable investors as well, which we've also touched on. But in a local market, we see a lot of vulnerable first home buyers. They've never transacted in property before. They don't understand the process. They're being manipulated by sales agents, and where we can add value is just to be the calm and be the reason, the voice of reason, to help them through a really big decision, and often the biggest decision of someone's life. So I think there's a lot of buyers agents doing very good things out there in the market and truly advocating for what is right for the clients that they're representing. And I certainly wouldn't want the messaging to be about the fact that our industry is doomed. It's not. There's some very good operators that will continue to uphold the best levels of service, and that's what we should all be doing, and that's what we should all be striving for as an industry.
I think the biggest message that Ben and I have tried to portray on 10 and a half years on this podcast is the loudest voice is usually the one that has the biggest budget, and the ones that have the biggest budget are usually the ones with the conflict of interest. So I guess that sums up what there's a ton of really awesome buyers agents in this country. We the three of us know heaps of them, right? So that's probably sort of amplifying what you just said, and hopefully that's a message for our audience that if they are the loudest, unpack why they are. Why have they got such a big budget? Why are they appearing on the YouTube channel on every second video that you're asking? Okay, just sort of follow the money on that, just to give you a little clue. Hey, my final sort of comment and then question for you is, through this conversation, we've known you for a long time, but through this conversation, we've learnt that you're a busy business owner. You've got children. Your husband and you are building a portfolio that includes development. So there's some assumptions we can make around how busy your life is. Why is the cause of taking on a third term at REBAA, why is that important to you outside of all those other things that you've got going on? And then my final question for you with that is, what question didn't we ask that we probably should have?
Well, first of all, thank you for asking the question about why. Why have I taken on the role of REBAA president? Because it does take a lot of time and it does take a lot of energy. But the reason is that I'm passionate about giving back, and I'm passionate about raising standards and helping consumers to understand what good buyers advocacy looks like. And if I can scream and shout that from the rafters for 3 years and make an impact, and also educate buyers agents on what service excellence looks like and what they need to do to actually meet minimum standards, then I feel like I'll leave the role in a way that leaves a small legacy, if you can say. So that's my why. What question did you not ask me that I wish you did? I guess the why behind everything that I do, and it's my family. I mean, you heard the story of, my background. I grew up in a loving family. I'm so fortunate to have 3 young adult children, 2 at university, 1 going into grade 12 next year. We're very fortunate that we're a very close-knit group of individuals and we all get along. I can't seem to get my adult children out of home. So, my legacy will be to help them get into the property market when the time comes. But that's the real why behind everything that I do. And I want to be demonstrating to my kids that it's not all take, it's actually give, and giving back to the industry that I love is one way that I can demonstrate to my family what purpose is all about.
Yeah, well, Melinda, you are a glowing example of what it does look like to lead by example and to show your adult children how to conduct themselves and how to be the best version of yourselves. And we are the beneficiaries of that. The industry is the beneficiaries of the additional work that you do, and I'm sure all your clients will advocate for you to say that they're the beneficiaries of your skill, your knowledge, and your execution in the marketplace. So congratulations to you, and thank you for sharing this important message to our community.
Yeah, I'll double down on that. Well done, because I sit alongside someone who does a lot of work, for Picard, similar roles for you, that a lot of it's thankless, a lot of it's just endless hours, and if it wasn't driven by, all those really strong character traits that the both of you have, I think that, that wouldn't be good for you in terms of REBAA. Ben's trying to protect the investor, and together you work to advocate on a common cause. So I'll double click on what Ben said too. Well done, and thanks for sharing today. It was great to collab with you on this important issue, but it was really cool to get a better understanding of who you are and what drives you as well. So on behalf of us all here on the Property Couch, thanks for joining us today.
Thank you so much. It's been an absolute pleasure. Please connect with us by scanning on the QR code below. There's a lot of free resources available to you. Don't forget to hit subscribe and like this video content so that others can also share in the content that we produce. Thanks so much, and bye for now.